So the proper attitude toward investing is much more important than any technical skills. We are doing what we love to do with people we love. Well, you've got to understand accounting. That's got to be like a language to you. And so yeah, you have to know what you're reading. I mean, and unless you know that language, and some people have more aptitude for that than others. And that's one thing I learned by myself. Now, I took courses in it afterwards, for example, but I learned it myself in it largely. So you have to do that, and you have to have the attitude that you're buying part of a business, and not that you're buying something that wiggles around on a chart, or that has resistance zones or 200-day moving averages, or that you buy puts or calls on, or anything like that. You're buying part of a business. And if you buy intelligently into a business, you're going to make money. And then you have to buy something that, in my view, which you do if you're buying a business, that you're not going to get a quote on for 5 years, that they're going to close the stock exchange tomorrow for 5 years, and that you'll be happy owning it as a business. If you owned Coca-Cola, it didn't really make any difference in 1920. When I went public, the important thing was what I was doing with customers. And you probably would have been better off if there wasn't any market in it for 30 or 40 years, because then you wouldn't have gotten tempted to sell it. And you'd just watch the business, and you'd watch it grow, and you'd feel happy. So the proper attitude toward investing is much more important than any technical skills. We are doing what we love to do with people we love every day. And, I've been lucky on health. God knows, how Charlie in 96 and me at 89 with our habits and everything. It's I don't know what it's a testament to. I think actually being happy in what you're doing makes a huge difference. And you don't want to go around having grudges against people. And I mean, all these things that cause you to think negatively, whether it's about the world or about individuals or about your own bad luck or anything of the sort. Just forget it, basically. I think that helps. Take the people you know, and the ones that are sour on the world gets sour on, basically. And so it's, now it's got to be tough, and certainly if you've got some major illness or something of the sort, I mean, that's just, you can have terrible luck in life, and and it can seem very unfair to you, but you're going to have a better experience in life if basically you see the positive sides of things. People will see the positive things in you at that point. And if you can find some, I'd say look for the job that you would take if you didn't need a job. And if you can find that where you're actually, I don't think I've had a job. I mean, I would define work as doing something when you'd rather be doing something else. I like to get numbers. so I'm getting reports in weekly in some businesses. But that doesn't tell me what the economy is going to do 6 months from now or 3 months from now. It tells me what's going on now with our businesses. And it really doesn't make any difference in what I do today in terms of buying stocks or buying businesses, what those numbers tell me. They're interesting, but they're not guides to me. If we buy a business, we're going to hold it forever. So we're going to have good years, bad years, in between years, maybe a disastrous year some year. And we care a lot about the price. We do not care about the next 12 months. I don't think there was any economist I've ever read that talked about negative interest rates for long periods of time. I mean, if you go back and read Keynes or you read Samuelson, you read any of them, they do not get into a negative rate environment. I think now there's still 11 trillion that's of government debt around the world that's at a negative rate. So we've never seen it before, and we've never seen, at least the conventional wisdom on a sustained period of long and growing deficits while the economy is getting better, extremely low interest rates, and really very little inflation. So something different is happening, but something different happens all the time. So, and that's one reason economic predictions just don't enter into our decisions. Charlie Munger, my partner, and I, in 54 years now, we've never made a decision based on an economic prediction. We make business predictions about what individual businesses will do over time, and we compare that to what we have to pay for them. But we have never said yes to something because we thought the economy was going to do well in the next year or 2 years, and we've never said no to anything because we were right in the middle of a panic even if the price was right. There's so many variables. I mean, in the hard sciences, you know that if an apple falls from a tree, that it isn't going to change over the centuries because of anything or political developments or 400 other variables that go in. But when you get into economics, there's so many variables, and the truth is you've got to expect good times and bad times in business. And if you were to buy an auto dealership and you're wherever you live locally, or a McDonald's franchise or anything like that, you wouldn't try and time the purchase. You'd try and make the right purchase at the right price, and you want to be sure you got a good business. If you're working in something where you're living off your paycheck from week to week, you want to have a little cash around, and you certainly don't want to have a credit card that's maxed out or anything like that. But if your house is paid off, if you don't have big living expenses, you got a portfolio of decent diversified businesses, you don't really need any cash. If you buy a business, if you buy a farm, you go up and look, every couple of weeks to see how far the corn is up, and you worry too much about whether somebody says this is going to be a year of low prices because exports are being affected or anything like that. You buy a farm and you hold it for, I've got one farm that I bought in the 1980s, and my son runs it, but I've been there once. I mean, it doesn't grow faster if I go and stare at it. I can't cheer for it. More effort, or something like that. And I know there's going to be some years when prices are going to be good, and some when the prices aren't going to be good. I know there's years when yields will be better than others. But I bought the farm, and it just doesn't. I don't care about economic predictions on it or anything of the sort. I do care that over the years it's well tended to in terms of rotating crops, and I hope yields get better, which they generally have. There's always been a struggle between the retailer and brands. I mean, if I've got a terribly weak brand and I want to get into Walmart, I'm not going to be able to do it. I mean, I have to offer all kinds of crazy concessions, and I want to be in Walmart if I have some sort of consumer packaged goods. The negotiation is way different if you have something essential versus non-essential. 10 years ago, Costco tried to get rid of Coca-Cola. Costco's got terrific loyalty among customers, and their own Kirkland brand is a $39 billion brand now, and it moves from category to category, and they only started in 1992. So they know brands, but in the end, they put Coca-Cola back in. If it had been Royal Crown Cola, they wouldn't have had to put it back in. So there's always that struggle between the brands. I mean, and there always will be. But the retailers net, it has been moving in their direction.